Hello,
Alright.
nice to meet you.
Same here.
Hello, everyone.
Hello. We have wait a few minutes. Okay.
I think we are present are here.
You want that we start or we wait a few minutes for the audience?
I'm turning off camera. It's
Okay.
looking yellow.
May I have your attention, please? Let's start now. Okay. Good afternoon.
Yeah, sure.
Good afternoon. Welcome to session 5 of the Turin Islamic Economic Forum. I am Dr. Imed Medhioub, Associate Professor at Imam Hamad bin Saud Islamic University from Saudi Arabia. I will be chairing this session today. We thank Dr. Lara Demarchi, who takes care of the technical support of this session. She is a PhD student at the University of Turin. Then this session will be run from 14 to 15. There will be 4 talks, and every speaker will have from 12 to 15 minutes for their presentations. If you want, we keep discussion and question at the last 10 minutes of this session. We present all the 4 paper. After as we pass to the discussion, okay?
Yeah, that's best.
Okay, thank you. Now, all presenters are here. Let's get started in presentations. I will follow the order as it is organized, the program that organized by the organizing committee, and I will start by myself. My presentation is entitled Heading in the Islamic Banking Sectors of the GCC Stock Market. There's some problem on my computer. I have a problem on my Problem on my presentation is clear now.
No, it's
Yeah,
not.
yeah, yeah. It's half covered.
No, I don't know.
Now it's okay. We can see.
Okay, thank you. Excuse me for the delay.
No worry, Dr. Ahmed.
Thank you. The title of the presentation is Herding and the Islamic banking sector of the GCC stock market. This paper is elaborated in collaboration with my colleague Mustapha Chaffai. Because of personal commitments, he will not be present with us today. Contrary to the efficient market hypothesis, behavioral finance theory assumes that investors are irrational and integrates psychology into the investment process. Therefore, extraneous factors play an important role in investment decisions and the choice of the stocks. With the development of the modern finance, we attempt to explain market anomalies and other market activities that is not explained by efficient market hypothesis. The behavior of investors. The behavior of investors during the different market conditions may not be the same, and it requires further investigations. And a common investment phenomenon witnessed in markets worldwide at different times is herding. Herding can be defined as the process where investors essentially decide to imitate the decisions of previous investors without sufficiently considering the information on the stock on their own views. And this process can lead to pricing distortions in stocks and lead to greater volatility. As a definition, we can say that herding refers to the lemming-like behavior of investors and analysts looking around, seeing what each other is doing, and heading in that direction. Recent decades, herding behavior has attracted research interest due to its important implications for market efficiency and portfolio diversification. As we can note that herding has not been widely studied in the context of sectoral analysis. That's why, in this paper, we examine herding behavior and Islamic GCC banking sector. For the GCC region, despite the economic uncertainty, the GCC banking sector continued to remain relatively resilient. And during the last 3 decades, the Islamic banking industry of the GCC has evolved and expanded in a rapidly changing dynamic and competitive global environments. The Islamic GCC Bank will continue to pursue consolidating as they seek to remain competitive and relevant in the marketplace, and there is a rising interest in Islamic banking because of its realistic nature, its resilience to financial shocks, and the increasing demand on non-conventional finance, especially by Muslim investors. Intrinsic nature of Islamic finance, the explicitness and the transparency of Islamic banking contribute to the stability of the Islamic financial system and require in Islamic banking to be partners in a financial contract compared with the lender-borrower dynamic. Therefore, the banking industry of the GCC has a significant share in the economy of the GCC region, and this makes it valuable to study the herding behavior of the GCC Islamic banking sector and the impact of conventional banking sector on herding behavior in this region. For the herding behavior, we can say that investors ignore their own beliefs and decide to base their decision on the collective actions of the market. And the presence of herding among investors would cause market imbalances and maneuvering the securities prices away from their innate values. Herding behavior and the financial market has been popular as a theoretical concept since the 90s, and many articles have been studied and discussed the herding behavior and the capital market. For example, let's go to the pioneer work of Christian Huang, 1995, who examined herding in the US stock market and employed return dispersion to conclude that there is no herding behavior in the US market. Also, a second pioneer paper is that of Chang and al. 2000, examined the herding for both developing and developed countries and concluded in evidence of herding in developing countries only. But research examining herding behavior in GCC countries are few. And recently, some papers interested to the examination of herding behavior in GCC, and we can note, we can cite the works of Chaffai and Medhioub in 2018 that highlighted the evidence of herding behavior during up market periods in the GCC stock market. And the paper of Youssef and Mokni, 2021, who concluded the evidence of negative effect in low herding regimes and positive effect in high herding periods in GCC stock markets. And recently, the work of Malek et al., 2022, who examined the impact of economic and political risks on herding behavior and the GCC stock markets and found the evidence of herding and the lower quantiles and anti-herding and the upper quantiles. There is no study on Islamic banking sector, and that's why we have chosen to examine the impact of Islamic banking sector and the GCC region. And this paper, we want to give some answers to the following questions. Is there evidence of herding behavior in the GCC Islamic banking sectors? Do conventional banks impact on herding behavior in Islamic bank and GCC countries? And does there is evidence of asymmetries between bear and bull market conditions and the Islamic banking sector and the GCC countries? For the methodology, first of all, we have to determine how to detect herding behavior. When there is evidence of herding behavior and the stock market, the relationship between the square value of market return and equity return dispersion becomes negative and nonlinear. And in this study, we use the cross-section absolute deviation, CSAD variable, to measure the stock return dispersion. This is the formula. It's the average of absolute deviation from the return of company I to the return of the market. And to examine the relationship between the square value of the market return and stock return dispersion, we consider the following regression. CSAD, the dispersion, K equal beta 0 plus beta 1, absolute value of RMT, the market return, and beta 2 multiplied by the square of market return. When the coefficient beta 2 is significantly negative, we find evidence of herding behavior. Also, to consider the interdependencies between Islamic and conventional banking sectors in the region, we consider the following regression. CSAD equals to beta 0 plus beta 1 absolute value of RMT plus beta 2 square root of RMT plus beta 3 the dispersion of the conventional is banking and the GCC plus beta 4 square of R conventional of the return of the conventional market plus epsilon. When beta 2 is negative as and the previous model is negative, there is evidence of herding. For the coefficient beta 3, when beta 3 is positive and significant, we can say that the dispersion at the conventional sector impacts Islamic banking sector. And for the coefficient beta 4, when beta 4 is negative and significant, we can conclude that the Islamic banking sector wide hair around the conventional banking sector. Pass now to the also to as many papers highlighted that there is a difference and asymmetry between down and up market periods. We propose a measure of herding during down and up market conditions as follows. We decompose our sample to two subsamples. The first where the market return is negative, and the second where market return is positive and represent the up market period. And we estimate the same models previously presented. Now we pass to the empirical results. First of all, for the data collection, we have considered in our sample Islamic and conventional banks and the GCC countries, and this table give you an idea of the considered conventional and Islamic banks to the 6 GCC countries. We have considered, for example, for Saudi Arabia, 4 Islamic banks and 8 conventional banks. For the Kuwait, we considered 5 Islamic banks and 5 conventional banks. And for Oman, for example, we have considered 2 Islamic banks and 6 conventional banks. The data we have considered daily data for the period January 5th, 2015 to September 4th, 2023. We start by the descriptive statistics. Table 1 presents the descriptive statistics. From this table, we can say that the average and median CSD for both Islamic and conventional banking sectors are almost similar. It's about 0.0999 for the Islamic banks and 0.994 for the conventional banks for the dispersion for the variable CSAD. Also, the median is almost the same, similar, or they are similar. Concerning the average Islamic return, it's higher than the conventional banking sectors. In average, we have a mean of 0.001 and for the conventional sector minus 2.3 or minus 6. We have the market return in average for the Islamic banks is larger than conventional market return. All series are stationary for both Islamic and conventional banking sectors. And finally, from the skewness and courtesies, we can note that the hypothesis of normality is rejected and the CSAD distributions have a fatter tail. That's why in the empirical analysis, we use the quantile regression methods, and we base our interpretation on this model, the quantile regression models. We start for the table 2, the analysis for the empirical results. The analysis of herding behavior, we consider the full sample. From this table, we can say from model 1 that there is evidence of herding and the lower upper tail and the lower quantile. We have negative and significant coefficient of beta 2. Also for model 2, when we consider the impact of conventional banks on Islamic banks, we obtain a significant and negative coefficient beta 2 only for the lower tail. For the upper tail, there is an anti-herding behavior for the Islamic banks. And this model 2 when we consider the impact of the conventional banks on the Islamic banks, we can remark here that the coefficient of for both upper and lower tails are negative and significant, which indicates then that the Islamic banking sector is wider around the conventional banking sector. Also, for the coefficient relative to CSAD conventional, we have here positive and significant coefficient for the coefficient beta 3, which indicates then that the dispersion and the conventional sector impacts the Islamic banking sectors. And here we can conclude that conventional banks have an impact and influence the Islamic banking sector and the upper and lower tile, while there is an evidence of herding behavior and the Islamic banks only on the lower tail when we consider the quantity 10%. After that, we have tested is there asymmetry between down and up market periods, and table 3 represents the results. First, we have the results of the down market period, and for the column 3 and 4, we have the results of the up market periods. From these two tables, we can say that there is difference between the two periods, and we can see that there is a property of asymmetry between the two periods. The similar result concern the coefficient beta 3, when we have that the dispersion of the conventional market, the conventional banking sector influence and impacts Islamic banking sectors for all periods, for the up and the down market period, and for the upper and lower tails. We have here positive and significant coefficient. For the herding behavior of the Islamic bank, we know that we have there is evidence of herding only and the lower tail, the down market period, but the up market period, there is no herding from the Islamic banks. For the upper tail, we have and the down market period, we have an anti-herding behavior. The coefficient of beta 2 is positive and significant. And for the upper tail of the down market period, here we have a negative and significant coefficient of the coefficient beta 3, when here we can say that and the upper tail, there is evidence of herding behavior only at the lower tail 10% during down market periods, and anti-herding behavior at the upper quantile 90% during the same phase. No herding behavior is detected during the extreme up market period. There is no herding. And we can say that there is the dispersion and the conventional sectors impact the Islamic banking sector. As conclusion, results suggest the evidence of herding behavior and the Islamic banking sector. Islamic banking sector wide herd around the conventional banking sectors. And we can say that the dispersion and the conventional sector impacts Islamic banking sectors. These results confirm the existence of asymmetry between down and up market period, and the herding is more significant at lower tail when market is falling. These results are in line with the previous works for which herding behavior is found during extreme down periods, and for future research we can integrate the impact of uncertainty and geopolitical news on herding behavior and GCC stock markets. And thank you for your attention. Excuse me for the disturbance. I have some problems with my laptops, and now can pass to the next speaker. Our next presenter is Dr. Babruk Aijaz Baloch. Mr. Baloch has a PhD in Business and Finance from the University of Bolton. Today, he will be talking about an important subject concerning laundering and terrorist financing in Islamic financial institutions and the role of scholars and Sharia supervisory boards. We give us the hand to present your work, Mr. Baloch.
Thank you, Dr. Imed. It's asking for some settings, and I have to quit and reopen for sharing the file.
I will get. Now you can share your document.
Hello.
You have some problems to present your.
Hello, what's happening?
Yeah, it's having some technical difficulties. Give it permission to share the file.
No, that's a Jeep. That's not.
I hope it will work now.
Assalamu alaikum, Sheikh Imed. Lays hada ya Sheikh.
What? Salam. How are you?
Alhamdulillah.
Salam.
Alhamdulillah ya akhi. Allah hayyik. Hayak Allah. كيف حالك؟
Fine, thanks. Alhamdulillah.
Can I start after any other presenter until I sort this out? Hello.
Professor Imed, we can move to another presenter while
Until I sort this technical issues.
while Mr.
To the next. Okay.
Thank you.
Mr. Next speaker is Dr. Salim Bouzekouk. He is a PhD from the Academy of Islamic Studies, University of Malaya. I think that he is head of applications at Qatar Primary Materials based in Doha, Qatar. Today, he will be talking about the factors impacting the selection of Islamic unit trust funds, a systematic review. This work is in collaboration with Dr. Fadillah Mansor.
Thank you, Professor Imed. Everybody can hear me.
Yes, Alhamdulillah. Alhamdulillah. Salam ya Sheikh.
Okay, let me share the entire screen, and then I will move to the application. Share.
It's okay.
Everybody can see the screen.
Yes, very clearly. Very clearly. It seems that Dr. Fadillah has trained you very well.
Thank you very much. I will try to.
She's my former PhD student.
Excellent. And I am her student. So
Okay, so you are my grand student then.
yeah, we are 3 generations. So I will start this. Actually, I did this work as part of my PhD research. So I will go directly to the introduction. So the in terms of background, we have seen in Malaysia and in general an exponential growth of Islamic finance, especially in the Southeast Asia and Malaysia and Indonesia. And in particular, we have seen the growth of one product called Islamic unit trusts funds, which has witnessed exponential growth over recent years in Malaysia. Here are some indicators about this growth. For example, if we take the assets under management, then the amount has increased from almost 10 billion in 2004. We have now 115 billion in 2023. And also in terms of number of accounts opened by investors, there were around 500,000 in 2004. Now we have more than 6.5 million in 2023. So as you can see, the number have increased significantly. Because of this, there have been a lot of literature about what are the factors that are determinant for a Muslim investor to adopt those products. So what we have done is basically we did a literature review, and we have selected basically 15 studies about empirical studies about this literature. And then we looked into those 15 studies. We looked in the theoretical models, the factor influencing the adoption of Islamic unit trust funds from those studies. And then in conclusion, we put some recommendations with and some especially for fund managers, for regulators, for policymakers on how to increase the adoption of those products. So here the methodology we have used, basically we took all we used Google Scholar. We did a search using the keyword unit trust fund, Islamic unit trust fund, and determinants for the adoption of unit trust funds. We found around 406 articles. We took in the first step, we took duplicates. So then in the second step, we took only actually recent papers. So the papers that are older than 10 years, we didn't consider them. Then we kept only English one, so we didn't consider any foreign language articles. And then we took out all the ones that are not focused on the subject, which is like the factors impacting the selection of unit trust funds. And then we kept only the ones that are published in peer-reviewed journals. And finally, we took only the one that contains like empirical data. At the end of all this filtration process, we end up with 15 articles. So here is the conclusion. This is the main finding. In terms of from investor side, we have identified 4 factors. Those are the one that comes up in most of the studies. The 4 factors, not in any specific importance orders, are the following: Islamic financial literacy of the investor, his product knowledge, his risk aversion and expected returns, and finally the investor religiosity. So those are the factors that are significant, that comes up in most of the studies from the investor side. From the fund and the fund management side, the factor that are determinant is the Sharia compliance of the fund and the fund manager, the supply of information, the type of information, the knowledge, the awareness about the products and the fund manager. An important factor, which is actually not only for Islamic product, but for all the products in general, is the past performance and the past returns. And then there are some other factors like the profit distribution of the fund. The fund size also plays a role. Like we have investors prefer to go for funds with large size, and also the overall reputation of the fund. In terms of discussion, what we see is that the religiosity and the Islamic financial literacy are relevant factors. this shows that there is indeed a market for Islamic unit trust funds and demand for those one. So it's not only those factors, because those factors are significant. It means there is actually there is a real market for those products, because there are investors who are really have high level of religiosity or high level of Islamic financial literacy and are interested in having Islamic products. We can see it, actually, we can see it from the introduction in the numbers, the exponential growth of those products. The second point is that the knowledge of products from investor side and the availability of information from the fund manager side are also significant. What does it mean? It means what we have seen basically is that a lot of investors, although they want to have, they are Muslim and they are interested in Islamic product, they are not aware of the product. So it shows that the promotion, the marketing of those products will play is a key success factor. Basically, it's a key factor for the success of newly launched funds in order to increase the awareness of investors. And the third point is that basically risk-weighted performance is significant. This is what I said, actually, that like although they are Islamic products and those Muslim investors who have a high level of religiosity, who are financially literate from in terms of Islamic finance, they are also investors, so they are interested in having performance, and they are having they are interested in having a reduced risk. And the other point is that literature also shows that Islamic unit trust funds generally underperform conventional funds. So maybe this is one point that's need to be studied further. There is trade-off between religiosity and performance, because although the performance of Islamic unit trust funds is generally stable, it's the study shows that it's underperform conventional funds. The other point we have also now in terms of those studies, what we have seen is that some variables that may be significant have not been included in those studies. For example, I am giving example here, the easiness, difficulty of accessing those products, the social influence. I think Professor Imed has mentioned the herding. So this may be a significant factor, actually, because if acquaintance, if people who are important and so on selects product, maybe it will push other people to our family members. It will push the investor to select the same product. So this factor is not significantly studied, is not in those studies. The other point is that the models that are used in those studies are generally simple, mostly use linear regression. Some of them use TPB and TRI, but we didn't see models such as the UAT, the TAM model, the IDD, the Innovation Division model being used. The next point is that most of the studies are done in Malaysia. Also, some of them are done in Indonesia, but mostly in Malaysia. And there are virtually no studies in Turkey, in Pakistan, in other Islamic countries, in Indonesia, in the Middle East. Indonesia is there, but it's limited. So in terms of conclusion, those studies are important because they allowed us to identify some key variables that are significant for Islamic unit trust fund adoption. I have mentioned them in slide 5. Those variables that have been identified can lead to actionable decision by fund managers, by regulators, as I said, by policymakers, in terms, for example, of setting the fees, selecting which fund to launch, and so on. Selecting, like, developing marketing strategies, providing the relevant information to investors. However, as we have said, those studies have some limitations. such as the size of the samples, for example, the geographical scope. Mostly they are focused on Malaysia and Indonesia. In terms of variables used, as I said, some of the variables may be significant, but they have not been considered in those studies. Also in terms of the model used, so a limited number of models are being used, and also mostly linear regressions. So those limitations, I think, should be addressed in the future research. That's it. I have included here in the annex the list of studies, but this is the last slide.
Thank you, Dr. Salim, for your presentation. It's a very interesting topic. If there are some questions from the audience, we keep questions to the last minutes of the session. And now is Mr. Baloch, is it okay with you now?
Sure. Yeah.
Okay.
I hope my screen is shared and visible. Is my screen visible now?
No?
No.
Maybe we can ask Professor Intekhab Alam to do presentation while he's trying to set up his.
Yeah, that we have to do. We pass now to the next speaker. Is Mr. Intekhab
Professor Intekhab Alam, yes.
Excuse me, Professor Intekhab is from the State University of New York. Today he will be talking about the interacting with Muslim minority customers for new service development process and multicultural country. This work is in collaboration with Professor Ishaq Bhatti. You can start now, Mr. Intekhab. Also, you have a problem in sharing the document? We don't hear you, Mr. Intekhab.
Professor Alam, you there?
No, it's okay.
No, it's okay.
Thank you. Thank you, Professor Alam.
Make full screen, please, for your presentation. Okay.
Professor Alam, you're here? Professor Intekhab Alam.
Professor Alam, we cannot hear you.
Oh, okay.
Now we can. Now we can.
Now, Intekhab, we don't hear you.
We cannot.
We have problem in your mic. Prof. Intekhab, you hear me?
Professor Alam is on the phone, I think.
Yeah.
Yes, Professor Intekhab is coming and he's trying to fix up his mic.
Okay.
Prof. Intekhab, do you hear me? Because I don't hear you.
He's online. I just spoke to him and he's trying to fix. I think there is some issue, compatibility issue maybe. So it means two of the speakers are having these compatibility issues. So there is something.
If you can contact him, Professor, tell him that we don't hear you.
Completely disconnected. I think he's trying to reconnect.
To reconnect, yeah. No, Professor Intekhab, we don't hear you. Always there is a problem.
I think he's speaking.
He's speaking, but we don't hear him.
Okay. So let's see. Could you please share these slides with him?
I can hear you properly.
Okay. So please go ahead, share the slides.
Share the slides, please.
Can you hear me now?
Yes, I can hear you, Professor Alam.
We hear you, yeah. It's okay.
Okay.
Share the slides, please. It's okay.
Excellent. Thank you.
Okay.
You can start now.
Yeah. So this research we have been doing for a while with Dr. Bhatti from La Trobe University, and we have been working on this this issue of how we can market Islamic financial products to countries where Muslims are not in minority, are in minority. There are tons of research on Islamic finance and finances in Muslim majority countries, but hardly anyone has looked at the country where Muslims are in minority. So what we have done is how we develop new services, how the Islamic finances are actually developed. What is the process, and how, when we are developing, can we interact with the Muslim minority customers, and how to gain input? So we selected one country. So this is, we're talking about business to business Islamic finance, and we have limited our research to one emerging market in which Muslims are in minority, which is in India. So first we did the literature search. Despite being the second or maybe now the third largest population in the world, Muslims are above over 200 million. the market has not been growing very well. Although the financial service industry in India is very robust, very strong, but because of the geopolitical reason, because of the many other political issues, the market was static. It was not growing. And that's because due to the lack of offerings by many banking industry and the banks, they were not offering the Islamic finances to the Muslim customers. It created a sense of exclusion. It actually created a sense of marginalization of the Muslims. So with this background, we decided to study, can we develop new financial products for the Muslim customers? And if yes, how to interact with the customers? So we looked at new service development literature, and we found out that to develop a successful new product, you must be interacting with the customers. Okay. And then we look at customer interaction. We found out that many scholars question that, there is no value of customer interaction. Customers cannot give you the right information because customers don't know their own need. On the other hand, there is another school of thought which believes that no, customers can be a great source of information. So based on the literature, we found out it is the process, how you obtain it, that will tell you whether customer interaction has any value or not. With this background, we found out what is the literature. We found out that the process of interaction with the Muslim customers for new service development is very limited. Overall approach, we don't know yet. And also there are risks involved, which we couldn't find. What are the risks when we interact with the Muslim customers in India and find out what they needed and then develop our products? So we are going to answer these three gaps, which has become now the three key research questions. It is a very much of a qualitative study in which, because we were trying to build the theories and get as much information as possible. So we started more of a case research method in which we did a number of case studies, and we collected the data in two phases. Phase one, we collected the data from 21 banking firms in India, which was in Mumbai, which is the commercial hub of the country. And we approached them, but I actually approached about 47 firms, but only 21 agreed to participate and provide us the data. So we interviewed with the key informants from each of the 21 firms, two key informants, two managers who were actively involved in the Islamic finance development process in their respective firms. Then for data triangulation, making sure that we test the internal validity and external validity of the data, we also interviewed customers who were involved. So when these firms interacted with their customers and obtained the input from them, we approached those business customers as well. And most of them were small and medium-sized business owners because it was a B2B, and they were running their businesses and they were obtaining, they were trying to get the financial services from the banks, which is Sharia compliant and which follows the Islamic laws and rules. So we interviewed them as well. I also reviewed lots of data, archival records, and then we put together into a database. And that database list came up with 212 pages of transcripts, which included the interview from the customers, interview from the managers, and a number of different archival records. So this was the two-phase methodology. Let's talk about findings. This was very interesting finding. Most of the companies in other parts of industry follow a very structured approach to financial product development. But we found out that banks and the financial institutions were following very linear, very ad hoc. They were not sure how to develop this kind of product. They were following their gut feeling. So they were all over the place and had no idea what should be done and what should be the structure for developing new Islamic financial products. Also, we found out that the way we used to the way the companies used to interact with their customers have changed drastically because of the new technology of the digital media and so on and so forth. So the customer contact points have changed. They are not interviewing anymore. They are asking the customers to provide their input through their social media pages and all other different digital channels which the company was or the firms were using. So what was there were tons of different findings, but because of the 12 minutes time limit, let me quickly jump into implications. First, yes, the Islamic financial development process is very ad hoc. They are using they don't know how there's no defined process. It's a hodgepodge area. Well, let's find out. Let's go and talk. But they're not following a very structured process, and that's what we propose in our research. There are much more interaction going on social media rather than face-to-face, rather than interviews and so on and so forth. In terms of stages, new service development stage has like about 8 stages: idea screening, idea generation, business analysis. The initial stage of idea generation and idea screening are the most important one, followed by at the end when the companies decide to test market their innovation. And another interesting finding was in my other research, in my other areas, we found customers are reluctant. Customers were not very willing to participate unless you give them some incentive. In this case, we found out the Muslim customers were very willing to engage with the firm. They were actively pursuing the firm to develop. And I can see why when I asked, they said, there is a lack of Islamic finances in India. And we were begging the government, we are asking the companies to develop something. And that's why any company who approaches us will be more than happy to provide the input. So Muslim customers are very much willing to engage with the firms, and they indeed serve as a valuable source for generating innovative new service ideas. So, going on to another piece of findings, what are the best mode of interactions with the Muslim customers? We found out Muslims were invited to the firm to observe the service delivery process. So observation. Many customers were invited to join the management retreat. The companies also did focus group, brainstorming, in-depth interviews, team meetings, and of course, as I told you before, they also did the use of lots of social media channels. So besides approach, we also find the risk associated. When a company is listening to the Muslim customers about the need for the Islamic finance, they might highly customize it. And that is the risk that needs to be taken care of. If you customize the product for one small group of customers, in the long run, the product will not be very successful product. So there are some implications that how not to overdo over customization. Take a general feeling from the Muslim customers and then develop a product that suits a large group of customers. So the three key, the role of Muslim customers is very, very important, and it must be taken care of, and they must be involved. There should be a very structured process rather than doing ad hoc. Make sure you follow all the steps of new service development process. That's what I've told to my respondent. And we also found that these findings might also be applicable for other countries in which Muslims are in minority, like in Europe, like in other parts of Asia where Muslims are in minority. And there is absolutely more, we really need more research in emerging markets, bigger markets with a small number of Muslim customers. And this is the last part. What the Indian government and the policymakers should do? First, they must liberalize the process because there is a need, there is a demand, and customers are willing to adopt it. And once you ignore this group, which is growing in our population, you are missing out a key contributor to the Indian economy. And that's what my implication is. So to achieve the growth and prosperity in a firm, in a country, this sector, this niche market should be marketed, should be tapped in very aggressively. And with this, I actually conclude my presentation.
Thank you, Prof. Demarchi, for this clear presentation. Very interesting topic. Now we return to Mr. Baloch, and we hope that he can share his presentation.
Let's hope for the best. It's uploading. Hope this time it will work.
It's okay now.
Finally, thank you for your patience. My name is Babruk Aijaz Baloch. I am PhD candidate from University of Bolton, UK. And I also work here as an exam invigilator. I believe that as an Islamic entity, Islamic banks are expected to fulfill the purpose of Islamic Sharia. It is relationship beyond profit. That's why this study aims to assess the performance of Islamic banks in context of money laundering and ethical, social, and environmental role in accordance with the higher goals of Islamic law, which we all know as Maqasidul Sharia. This is the topic of my thesis and analysis of the role of Sharia board in preventing money laundering. As you all know, the terrorist financing has become a synonym to money laundering. We all know that Islamic finance has shown its resilience, not only after COVID, but back in 2008 and 9, when all the world was suffering from financial crisis, it was Islamic finance who worked that time. And similarly, after COVID in 2021 to 2022, it has grown 10 to 12% annually. And all the money laundering laws which are implemented in Islamic finance were basically designed for the conventional financial systems. While Islamic finance has some unique characteristics, such as the relationship of customer and the entity, unlike the conventional system, here customers are more like partners if we talk about the Mudarba, Musharka in other countries. And some scholars, such as the arts, they also believe that the activities of Islamic banks should be oriented towards ethical investment beyond the elimination of riba, gharar, or the haram element. Sharia Supervisory Board is the primary responsibility of a Sharia Advisory Board to ensure that all financial products, contracts, and transactions offered by the institution are in compliance with the Islamic law. If we talk about the money laundering, FATF, the Financial Action Task Force, which is the international body which regulates and sets the standards, describes the money laundering as the act by which the proceeds of crime are made to appear legitimate. Before 2001, money laundering was something like drug trafficking, fraud, extortion, and avoiding of taxes, corruption. But after 2001, we have seen that it all has changed. It become the more focused on the terrorist financing. If we talk about how much it costs to the world, according to the United Nations report published in 2023, in first half, the estimated amount of money laundering globally exceeds 2 to 5% of GDP. We are talking about the world GDP, which amount to around 800 billion euros to 2 trillion annually. There are different trend setters on national levels and then regional bodies. But on world level, FATF look after the trend and guidance, set the guidance to tackle the money laundering. FATF was founded in 1989 on the initiative of the G7 to develop policies to combat money laundering and to maintain certain interest. In 2001, as I talked before, its mandate was expanded to include terrorist financing. There are 39 jurisdictions of FATF, GCC countries, and European Union is only 2 of them. If we talk about how money laundering happening, there are 3 stages of money laundering. First is placement. It refers to the physical disposal of bulk proceeds derived from illegal activity. This is the first step, and here banks work as a firewall against the money laundering. And this is the initial stage which can be identified. If they pass from this stage, then second is layering, where they move the funds from institutions, which include the banks, other financial institutions as well, to hide their origins. Now, when they are placed in the banks, somehow they become legitimate because there is checking, and if they cross that firewall, after that they do the layering, they invest in the market, they buy properties or start new businesses. That's called the integration. After that, they sell those things and again invest funds into banking sector, and now it becomes the legitimate money. You can't trace them out from where they come. Therefore, there are 3 objectives: to assess awareness and understanding, to analyze perception of effectiveness, to identify challenges and opportunities, and to gather recommendations. That's why this survey, quantitative survey, include not only the stakeholders who are working inside the banking, but also the scholars who are doing research on Islamic finance. Based on those objects, we said these three questions: how familiar are professionals in Islamic financial institutions with the anti-money laundering framework? When we are talking about the framework, it includes the international guidance, the national and regional, like European Union guidance, and then those specific countries' guidance. And what challenges do professionals perceive in the role of Sharia Advisory Board in combating money laundering, how they are looking at them for guidance, and what are the suggestions and recommendations by industry professionals for enhancing the effectiveness of Sharia Advisory Board in the context of money laundering prevention. If we talk about the money laundering regime and the framework, it is similar to Maqasid al-Sharia. Like there are different theories from the different scholars of Islamic finance, but it is important to note that while these scholars have different perspectives on Maqasid al-Sharia, they all emphasize the importance of achieving well-being for all individuals and societies. And Sharia supervisory boards play a crucial role in guiding Islamic financial institutions to adhere to Maqasid al-Sharia principles. Their oversight ensures that all financial activities and products are in compliance with Islamic law. And according to Accounting and Auditing Organization for Islamic Financial Institution and Islamic Financial Service Board, its primary function is to ensure that the financial products, services, and transactions offered by these institutions comply with the Islamic principles and are Sharia compliant. When we are talking about the Sharia compliance, we mean it from justice, fairness, and that no illegal or shady money is involved in the system. This was the empirical quantitative survey distributed digitally. The survey was conducted in different parts of the world, irrespective of geographical jurisdictions of the respondents. There are 66 respondents, and this is an ongoing survey in Islamic financial institutions across the world. Questions designed to analyze the awareness of anti-money laundering framework among stakeholders and perception of Sharia Supervisory Board as a supervisory institution within organizations. As we see, the greater the experience and education level, the greater the perception towards the Sharia Supervisor Boards. With the 10 to 15 years experience of stakeholders, look at Sharia Supervisory Board as a leading body to tackle the money laundering. Their percentage is 87, followed by the greater than 15 years experience holders, who 71% among them see them as a perceived body. And then comes the less than 5 years employees. Role of Sharia Supervisory Board in prevention of money laundering have been instrumental in guiding Islamic financial institutions throughout and ensuring adherence to Maqasid Sharia principles. Maqasid Sharia and FATF compatibility, the overwhelming positive inclination towards the compatibility between Maqasid Sharia and FATF, as reflected in the survey, indicates an industry-wide acknowledgement of this alignment. Based on the survey results, there are some recommendations. First one is that the changing nature of the financial system and new methods are adopted by the criminals. It is necessary that Maqasid Sharia and FATF regulation Sharia Supervisory Board members could be encouraged to engage in continuous learning. Institutions can facilitate regular workshops and seminars in collaboration with international AML trendsetters, which include World Bank, IMF, and FATF, and also regional bodies. And knowledge sharing platforms encourage the creation of platforms where experienced professionals can share insights, case studies, and best practices. This would require an analysis of money laundering methods, trends, Islamic finance, and the related risks arising from the nature of the contractual relationships between the institutions, their customers, and the providers of assets. And third one is assessors and competent anti-money laundering authorities. Ongoing round of assessment of the effectiveness of AML regime should seek to understand whether the current recommendations set out in the FATF standards require further adoption. As I said before, that when they created those frameworks, they had conventional financial system in mind because the FATF was founded in 1980. Currently, they have 40 set of standards and regulators. And Islamic finance, modern Islamic finance was on early stage that time. Thank you.
Thank you, Mr. Baloch. Thank you for
I'm
this.
sorry, I was having technical issues earlier. So
No problem, no
again
problem.
and again, I had to go offline and then join.
Thank you for this interesting topic, and thank you all presenters. Finally, despite technical problems, our paper were presented. Because of these technical problems and the waste of time that we have, we have to take 10 minutes for question and discussions. Are there questions from the audience?
I think Dr. Bhatti has raised the hand.
Yeah, Prof. Ishaq, but please be brief in your questions.
Assalamu alaikum wa rahmatullahi wa barakatuh. First of all, my question is with Aijaz, Professor Aijaz, because he talked about money laundering. And may I ask what model you are using? Because what you have done is, so you are trying to mix up SSB, Maqsad Sharia, CPD, AML, CFT, ML, machine learning, and TIEF. You are merging everything together. You need to narrow it down. I don't understand what really you want to do it, to be honest.
Basically, there has been no previous study on the topic, but there has been question raised by different organizations, such as in 2016, IMF raised paper questioning that why there is no research or study in Islamic finance in relating to money laundering. And when we talk about the money laundering, nearest thing model comes in mind is Maqasidul Sharia, that fairness and justice of the society and the clean money. So in this way, this is my first approach. Hello?
Yeah. Are there other questions?
Actually, this survey is part of the mixed methodology, qualitative and quantitative. And
Okay.
yeah.
Okay, there is one article I just finished with Professor Atikur Rahman. It's published in Malaysia on Maqsadish, but that is a quantitative approach. If you like, I can send it to you. That would be very, yeah. Thank you. Thank you.
And for qualitative purpose, if you guys have time, I would like to interview if some of you agree. It will be beneficial for my further research as well.
Thank you. Please send me email so I can. Please send me email. I can attach a link with the paper. Thank you.
Thanks, Prof. Ishaq, for this intervention. Are there other questions? Please. Yeah, Prof. Ishaq. You can give us your question, Prof. Ishaq.
Okay, thank you. My question is and to our brother Salim Bouzekouk. See, you only surveyed 15 articles, which is a very small sample. And you are considering 4 factors. Within 4 factors, one of your factor is fund manager, right? So can you include further sub-factor of fund manager, adding a dummy variable about timing of investment and experience that will enhance your model? Thank you.
Dr. Bhatti, thank you very much for your comment. this is one of the points that we are including in our research. But as we are doing this literature review, we couldn't find any evidence of this variable being included. It's not mentioned. Maybe it's mentioned in one or two of the articles, but not like in the majority of them. So we definitely it's a good variable that we will include in our research, and we will consider for our future papers.
Well, thank you. And also, if you can look into your supervisor's paper with me and Professor Shafiq from US and Hong Du in the Journal of Risk and Financial Management, in that we considered a totally different model. And you may try to look into it, see how you can use that model as well.
Definitely. Actually, I was with my supervisor online just now, and she is proposing that we prepare a paper together, three of us.
Okay, thank you. I will be more than happy to do that.
Definitely. Let's cooperate, Professor.
Thank you, Professor, for these questions. Very interesting questions from you. Are there other questions, please?
If there is no question, I can make one more comment. Let me wait for others if they can ask any other question.
Yeah, Professor. With pleasure.
Okay, thank you. See, the paper my co-author, Professor Intekhab Alam, presented, he just covered only India as a Muslim minority country. We also did a work comparing Australia and India together. See, in Indians, Muslim population is 18 to 20%, and but in Australian Muslim population is only 2%. In India, we don't have a specific facility for the Muslims, though the Muslim population is very high, and growth of the Muslim population is growing highest than any other faith in India. Whereas in Australia, we have a similar pattern, but in Australia, we are only 2% of the population, but we succeeded to get double taxation duty removed. We succeeded to get double stamp duty removed. We succeeded to get institution of Zakat Foundation, Qardul Hasna funding from the Australian government. So the marketing of Islamic finance is really pulling up there. The second thing is we are getting good support from Australian government, Australia being the only Muslim democratic country located in a Muslim surrounded area. India is also surrounded among the Muslim countries, and ruled by the Muslims, India, for centuries, but unfortunately, we couldn't find any similarity between Australia and India because India is lagging behind. Thank you.
Thank you, Professor, for these comments. Just I have a question for Mr. Barosh. As we know, since September 21, great attention has been devoted to the study of money laundering and terrorist financing risks in Islamic finance. In your opinion, is these countries can prevent these actions via Sharia scholars and Sharia supervisory boards only, or there are other tools that should be added to this to prevent these actions?
Actually, there is hierarchy in financial systems and country-wise. Every country has different approach for oversighting the financial institutions. That's why I am focusing on the framework only. So on the nature of the country, it can be Sharia Supervisory Board, Sharia Advisory Board, or any internal body or board of directors. But the international trend setters are FATA, Financial Action Task Force. Then it moves to regional bodies. Then it moves to on the regulatory bodies, which could be central banks or any board.
Thank you for this answer. Does Dr. Lara have some comments, or it's okay?
Issues in Australia, and in Australian ministry, some ministry people and treasury people and taxation board of Australian representation, and also the Islamic Bank of Australia is sponsoring that event. And I can use this platform. Thank you for asking me. If anybody want to register, feel free to register at Australian National University Islamic Finance Symposium.
Actually, I have registered. My paper has been accepted there.
So inshallah, see you there then, if you're coming.
But before that, I am sending you email and other participants too.
Okay, excellent. Thank you.
Thank you.
Then thank you, everyone. You have the link for the closing remarks with the best paper and the announce of the next conference. You can assist that starts 15:45. Now and finally, and before closing the session, I would like to thank again the speakers for their contributions and the audience for their attendance. Hope to see you next meeting.
Thank you, Professor Imed.
Thank you. Thank you all.
Thank you, everyone.
Inshallah, Jazakallah khair. Thank you, Professor Imed, doing excellent job in running this session.
Jazakallah khair.
Allah hayakallah.
Thank you.
Assalamu
alaikum. Goodbye.
Fi amanillah.